Good morning, everyone. Welcome to our Thursday morning trading session. Hang on here just 1 second. I'm going to get you my charts. All right, so the market just opened. Let's take a look here what's been going on in the overnight. Rather subdued overnight session. So the market tailed off a little bit toward the end of the day yesterday. Pretty quiet through the Asian session. Here is the European Open. We got a trend change signal to the upside. Well, I guess it did follow through a little bit after some choppiness, but not a lot of follow through. And that's pretty much where we find ourselves right now out of the open. So yesterday the market made its best move right out of the open. I'm tempted to consider the opening signal, but I don't know. I usually hate to be the first one into the mix. You know, like Ray Burke always used to say, don't be the guy carrying the flag. Don't be the first one through the door. All right, you know what? Maybe what I'll do is we've got this first micro macro cross. Rather than go crazy on it, maybe I'll just throw a onesie on it. We'll look at a first micro macro cross at the high, maybe cover it to here. If it does turn into a buy signal, I'll ditch the profit target and we'll see how far we can let this one run. It keeps retreating a little bit. Still a first micro macro cross. And all I'm doing here, because it's the first signal, because it's risky, oh, and now we're into yellow bars, I was going to cover it as deep as I could with the intention of adjusting the trade as it went on. So I'm not going to take this trade because we're in yellow bars, but maybe what we'll do is we'll follow it. All right, so there's the signal. And I can show you, hopefully I can show you what I mean. There's a reason this went into yellow bars. Actually, now it's a macro pullback signal. Oh, and there we are into yellow bars again. So it pretty much nixes any attempt we had to buy. The conditions just aren't right for a buy. And actually, we're getting a rule of three type situation here in the Eagle and the Raptor. Let's take a look at the Raptor first because I can get a trade on there pretty quick. So the Raptor doesn't do a rule of three, but we've got a test of the extreme here against the hard edge and a failure. So I'm looking for another chance to get in there. And we just had our, well, sort of a rule of three signal here. The rule of three simply occurs when the market, this is on the Eagle now, generates signals against the trend, against the band. But a rule of three is always preceded by a test of the extreme, which is what we have now. Okay, so it looks like let's see if we can get in on a sell here somewhere before it runs too far. Darn it. I missed the opportunity here in the Raptor. This test of the extreme was a giveaway that the market was going to tail off. And here in the Eagle. See, we had one to the upside, and then we're getting one to the downside now. Thanks, Jim. Jim says the DAX is selling off, and the advanced decline numbers are fairly even. Well done. Jim just bagged 40 ticks on the YM. Fantastic. Oh, shoot, and Eric. I'm looking around here, and I missed the first micro-macro cross. Nuts. Really dropped the ball this morning. Hazards of a trade room moderator. That's right. If it is heading lower today, we should get another opportunity here somewhere. My only concern is that the best moves have always come first thing this morning. All right. Well, a beautiful move. I hope somebody else was able to take advantage of it. We did see it just a little bit late on the switch. And Jim's telling me the advanced decline is now turning into a more bearish condition where we only have about 1,000 buyers and nearly 1,600 sellers. So that's going to be like a negative 600. So it's going from even to negative. That's pretty much confirming what we're seeing here on the chart also. Crude oil, again, very stagnant today. And soybeans looking a little bit bearish, at least on the Eagle. We're getting a with trend signal here to short. Let's just make sure those stops are far enough back in case the market decides to try to retrace a little bit. So it looks like soybeans working on a little bit of a channel style formation like this. Yeah, major sell-off to support. I think what we're looking at, these numbers are a little bit familiar here, around 45.70, 45.60. I think that's where yesterday's opening gap was. There was a slight opening gap. All right, looks like while we were looking at the soybean chart, there was a macro pullback signal here. So really, if you were, say, trading even just the hawk, an easy scalp there. And let's see, did this one reach our profit objective also? Yes, it did. So shoot, your day could be done. Now, I know somebody's going to ask me, Eric, is this a 4-arrow consolidation? Well, yes, I suppose it is. The thing with the consolidation signal, the 3 and 4 arrows consolidation, 3 arrows in crude oil, 4 arrows in just about everything else, is that the consolidation pattern shows it normally develops into a bear flag type thing. In this case, a bear flag. Occasionally, it will go sideways. That doesn't make it any less of a 4-arrow consolidation. It's just that it's easier to take advantage of if you see it printing as a bear flag. Okay, so I think the thing to do is maybe take the signal below the lows. I know the signal's going to print right there, but oh, and now we're into another macro pullback. And now we're into yellow bars. So was that just a big blow off? All right, here comes the Falcon with a trend change signal, a way late trend change signal. I'm going to use the support and resistance suite here to cover the trade, just to try to give myself a little bit of staying power. Now, we haven't actually printed the signal yet, as you'll notice. We've just got the warning dot. I'm anticipating where the signal might print. Jim says, wow, the YM ran all the way to the blue line on the support and resistance suite, which it did here on the NQ also. Fell off the primary resistance all the way down here to primary support. Jim also asked, why don't you have it, the support and resistance suite, on your other charts? Well, it's mostly because I'm showing you my charts, and to avoid the charts getting too cluttered, I've only got one tool per chart. So I've only got the Geiger counter on the Raptor. I only have the trade forecaster here on the Eagle, the Day Ranger on the Hawk, and the support and resistance suite on the Falcon. The lines would remain the same, right? I could put the, oh no, here I won't do it on the Raptor. It takes a little longer to load. I could do it here on the, or here, I'll do it on the Hawk, and then you'll see the figures are exactly the same. So when I need to know where the support and resistance areas are, I simply glance over at my Falcon. You can see the lines are exactly the same. But it's just to avoid the clutter. You could. There's certainly nothing wrong with it. All right, looks like that is not going to happen. Lance is thinking if 4581, this area through here holds, he says, we're going long. Yeah, it could be. I try not to get too much into prediction mode. I try to be more in reaction mode myself. All right, so we're generating a signal here on the Eagle. The ATR is currently against the signal. So I would need for that ATR to turn over. We got a couple of things going on here. We've got the Raptor working into a double pullback into the hard edge here. So we'll see if it comes out of that hard edge with the sell opportunity. Otherwise, if it fails, yeah, I think Lance is right, because it'll be the inverse of what we just saw here this morning. See, this was textbook. And then the big sell-off. Well, now we're getting a similar thing, a little messier, but similar here at the bottom. So if we come through here and now generate a buy signal, yeah, you could be right. We could see perhaps a little pop to the upside. Jim says, I hope so. All right, so here we go. I'm going to get simultaneous signals here. I'm just going to punch into the Raptor, and here comes our Eagle signal now. Now the ATR is turned over, so I'm going to use that bar as my signal bar. And I guess I'd better get a stop in play here. The better place to enter is right below these lows. That's where we've taken all the heat. That's where the sellers got real antsy to get into this market. So this is an itty bitty double pullback. We might see a little bit more pullback into the hard edge. All right, here we go. These lows are the biggies. Here we go. Okay, I'm going to snap that trade to break even. Come on. All right, so we've got profit on one on the Raptor. Just about to our break even trigger here on the Eagle. Come on. All right, come on. You know you want to. All right, this bar has got a little bit of a wick to it here. I'm going to be a little bit more aggressive and take the trade to the break-even position now, essentially covering it above the high of this particular bar. This is one of these bars where there's a huge fight going on between the buyers and the sellers right now. And if we look at the Geiger counter, we should see it whipping back and forth quite a bit. Oop. All right, so we just hit the break even, and we just hit the break even. So what I was going to show you is, well, actually I was expecting the Geiger counter to be bouncing a little bit more. All right, that's all right. We did okay there. Tested the waters on the breakout. So far, it looks as though there may not be a whole lot of participation. Oh, and here they come again. So here the Falcon actually produced a late filter entry signal. We've got a few minutes here still to take advantage of this one. Actually, I would be a little bit more comfortable just throwing a onesie on this one. Oh, come back. Just to make sure that they're truly committed. I can always add to the position. Got in a little bit later than I would have liked. So again, here's the big fight. If we take them out here, we should see the market tail off a little bit. Just hit the break even. Jim says, Eric, I love the ultimate support and resistance suite. Well, I'm glad, Jim. You know, honestly, it's one of the tools that's gotten the most positive feedback on it. Like, I'm really, really pleased with how it worked out. I used to generate these lines by hand, and Adam convinced me to make the programming available. So I'm glad that you guys are getting value out of it. Okay, so I'm switching now to the parabolics. And this is the problem with managing a single, of course. is, what do we got in open profit? Well, you know what? If we see, I'll give it to $100 or 150. There we go. Ooh, come back. Give me that 150 again. There it is. Not going to be greedy. I'm just going to punch out. It's very likely they are going to head a little bit lower here still. But, you know, you're walking down the street and you see a $150 bill sitting on the sidewalk. Do you stop and pick it up? Yeah, I think I'd bend over and pick it up. Well, I just did. And we'll make a note in the journal now. We'll see whether or not that was a good call. You see, the markets tend to go certain distances. And speaking of the support and resistance suite, you can see we're almost to the next support line. So a little bit of a bounce is to be anticipated. It's obviously not to say we can't go lower from here. We can go a lot lower from here. We went screaming lower out of the open. But that late filter entry signal, we hit our high probability target and then some. And I just felt a little bit more comfortable taking my profit. Crude oil stuck today. Stuck and quiet. How do you like that for a combination? So the overnight in crude oil, very subdued. We did get a trend change signal here, about an hour and a half into the London Open. A fairly decent decline. But now we're kind of stuck between our primary support and the secondary support. It's kind of waffling there a little bit. In fact, is this on? Have I got the right month? Yeah, I do. I'm starting to think maybe I'm trading an expired month. Oh, I should check the expiration on crude because we might actually be getting close to that. September crude, where are you? No, August 24th, August 20th. So we've still got a couple of weeks. All right, we're kind of flattening out a little bit after the initial decline. what I do too is I pay attention to, here maybe on the Falcon it will show it. I pay attention to the length of each of the moves. So you see that was a very strong move lower. And then this one a little bit shorter. This one not too bad. So far it looks like it was a good idea taking profit where we did. I have a feeling we would have tagged our parabolics by here. The other thing you can do is you can connect the dots, what I call connect the dots. You know how we normally draw trend lines like this? Well, you can also do the opposite, and you can connect the swing lows in a downtrend. And what that's going to do is it's going to show you when the market is starting to get a little bit more shallow. So we're waiting on this one here. Another late filter entry signal, by the way. Probably get some follow through out of that one after all. But once again, you can see how each of the legs are getting a little bit shorter. So you can see the momentum waning somewhat. And bear in mind too, you don't need to take every signal, right? You can wait for the higher probability signal. I'm regretting not being fast enough to get this one because that one was, it had all the ducks in a row, right? It had all the elements of a good trade. We had the test of the extreme. We had the green bar sell. We had a rule of three style formation. We had a breach of the trend line, and boom, down they go, just falling down the stairs. And we had similar signals on our other tools, most notably here the Raptor. We had that beautiful test of the extreme textbook, and then we come back with the sell signal. Boom. Very large opening range. Yeah, making a tight little consolidation now. And like we've been seeing on the other days, the market starts to go a little bit sideways. So it makes an initial move and then starts to flatten out. Well, you know, I'm almost tempted to bracket this whole range and just trade the breakout side. I think we might see a little bit of a pop to the upside also. Yeah, Tony says, is there something wrong with the audio? No, there's just nothing going on. Nothing to comment on at the moment. I know, usually I'm not at a loss for words, but well, you know, we are getting a first micro macro cross. This would be a more aggressive trade. I'm going to do it here because we're in the trade room. It's not necessarily a trade I would consider a higher probability trade. And you can see the way I'm setting it up here below the lows. The first micro macro cross signal came here. I'm not going to enter until we get outside the top end of the trading range. The problem with trading these breakouts is that we've got this whole test retest scenario, right? So here's our trading range. We're coming out. This is the part I'm concerned about. Now, if the breakout part is strong enough to reach our profit objective, well, then it's a non-issue. However, it's this retest portion that could cause you some problems because you don't know how deep it's going to retest. It could retest all the way back into the trading range, in which case it negates the effect of the breakout. But, oh, there we go. So far, so good, actually. Oh, and there it got some serious momentum. So all those sellers just took a hike. Oh, once again, DTS proving to be smarter than me. That was a first micro macro cross with pretty good follow through. Admittedly, much stronger than I anticipated. Well, let's take a look here. Where are they likely to go to? Well, we've got some resistance here at the hard edge at around 45.80. That seems like a very plausible target. Actually, 45.88 might be even better. That would put it near these highs up here. 87, 88, somewhere in that region. So we might blow the hard edge ever so slightly. Jamie's asking, can we take a look at soybeans? Absolutely. So let's take a look here at the soybean trade. Sweating it a little bit. Unfortunately, got in on this swing. Market retraced a little. Got my stops just above the top end of the channel. Looking forward to resume the trend. So we're getting another hard edge bounce and a sell signal still against the ATR. I'd love to see that ATR turn over. And here on the Falcon, you can see that soybeans also jamming up a little bit. Soybeans on the hawk, not looking like very much. Lots and lots of yellow bars. Lots and lots of congestion. Look at our filter down here. It's almost like a checkerboard. But we do have a little bit of selling going on in the soybean market, so hopefully that will continue to have some follow through to it. And now we're back into this sideways action. And yellow bars, so that pretty much nixes anything we were thinking about doing. The bottom end here, obviously where all the buyers have stepped in. I would be okay with letting the market break these lows and waiting for a retest. Waiting for a retest and then a selling opportunity somewhere through here. Oh, Jim knocking it out of the park. Picked up another 10 ticks on the mini Dow, he says, on 2 contracts. Nicely done. Just picking their pockets. Soybeans making a little bit better progress now, tailing off somewhat. I might actually take the trade to break even as we intersect the trend line here, because I've really increased my profit objective for soybeans. I tend to double the profit target, so I might even consider taking profit as we approach the trend line. Oops. There we go, something like that. Come on, beans, let's go. There's nothing else going on. All right, well, we'll put that back on the bench for now. Jim says the Russell just printed a new low of the day. We'll see whether that translates into continued lows for the rest of the stock indices. Wow, just a terrific trading day today. Great follow through. Crude oil, oh, actually crude oil is starting to tail off ever so slightly. It's kind of like watching a sloth, though. It's like, oh my gosh, you guys are, get with it. Very uncrude-like. And we'll go back to our soybean trade, which is just hovering above our break-even, or my break-even. If I did see the market turn here, I would become much more aggressive with my stop. I wouldn't leave my stop all the way up here. Oh, see, I shouldn't even have thought it. Lower, go lower here. Let me help you. So just looking at the NQ now here for a little bit of structure, trying to get a handle on what this market is doing. Just goofing around here a little bit, don't mind me. Well, and there they go. Well, I think we finally got the bear market. Not, full-blown bear market. I don't expect the bottom to fall out of the NQ anytime soon. But you know that I've been watching for a retracement of sorts for a little while now. And here's the NQ on a daily chart. And if we draw a trend line across here, maybe a trend line across the highs, you can see we're shallowing up a little bit. We're kind of getting that test of the extreme. This is perhaps starting to shape into a bear flag. In which case a failure here should see the NQ dip to about 4,400. So a very bearish day so far. As we're approaching yesterday's lows. And those came in at 45.51. So we're just hovering above yesterday's lows. That's right here, 45.51. It looks like this candle right here had a lot of buying on it, and those lows came in at 45.40. So lots of room to move here. Let's see, what about this candle here? 45.30. So the buyers fighting tooth and nail on the way down. Almost systematically at every 10 points. I would welcome a bounce back here to the 45.70 area. You can see here the channel that I've drawn on the eagle. That would also put us in sync somewhere with the hard edge. Make for an easier sell. Don't want to be the guy selling the low. Been there, done that. Didn't even get the t-shirt. So just snooping around. Oh, that was close. I almost sneezed in your ear. Sorry about that. Well, we've trickled lower. Just I'm reluctant to sell. I know we've got a sell signal here on the Raptor, but I also know we're in the bottom end of the trading range, and I haven't seen a retest yet. If I did sell this, I would have to cover the trade way, way, way up here, which does not make it that attractive to me. Now watch the bottom fall right out of this market, now that I've said that. So I'm doing my best to be patient here. You can see we're up against another support line. I wouldn't mind to see a little bit of a reaction here, a little bit of an uptick. All right. Josh says, Eric, my support line shows 45.49 and mine is at 45.50. All right. Let's just double check the data series. I have mine set at 10 days with a default of 24.5. Now the 10 days is the minimum that you need to load for the sweep. More likely, yours has to do with this setting here, the session template default 24/5. Now, the numbers will never be significantly different. And remember, you should always treat these numbers more as a zone. You see here it fudged just a little bit to the upside. Here it came just a little bit short. What we're looking at is these areas to be considered, right? Occasionally it will hit it right on the number as it did right here, but very often it may come up a tick or two short or go a few ticks long. And it could also be your data provider. Sometimes if we're a few milliseconds off, not that that should make that much of a difference to the support and resistance suite. Yeah, Josh says I set it at 30 days, which should be fine. It shouldn't change the figures. Okay, it looks like soybeans hit our profit objective. Hooray! So what, we've gone 4 for 4 now? A good day. Josh is asking about the YM. Let's throw the YM on here. I should actually put the YM up instead of crude because crude is just so soft right now. Come on, load up. It's actually a little bit unusual to see the YM more active than the NQ. And Josh says it's starting to trade into the hard edge. You are absolutely correct. And of course, once it encounters the hard edge, we can anticipate some sort of signal. Oh, and it seems to be following that channel line pretty well. So like the NQ, we seem to be in a little bit of a declining channel at the moment, and it seems to be honoring it. Therefore, if we do get a sell signal here and everything comes into sync, the place to put your stop is right above here. And of course, the closer it gets to this whole 174, 50, 60 area, the more likely a sell signal will hold. But it does seem as though we're flinching somewhat as we're getting into the remainder of the session. Things slowing a little bit. Here on the YM, we also got a very nice green bar sell out of the open. As we did with the NQ. And we're waffling a little bit. We are getting a first micro macro cross signal here now to the upside. And we have had a test of the extreme, so there is probably a pretty good chance that we might see a little bit of a rally here. Look at that decline in the NQ or in the YM. It's a crazy move out of the open. My poor computer is bogging down. And here we go with the 3-arrow, 4-arrow consolidation macro pullback combo on the Hawk. But it should be fairly obvious that we don't have the momentum that we did earlier. Soybeans also flattening out somewhat after hitting our profit objective. So here we are toward the bottom end of the trading range. Printing another signal, but not really one that I want to get too excited about because of this range. Now, if you go through the trouble of doing ranges on your chart, as you're seeing me do sometimes, you have to always keep in the back of your mind that these lines that you're drawing here don't really exist, right? They're simply on your chart. Now, that's not to say that traders aren't aware of them. You can be sure that there's traders, thousands of traders drawing trend lines on their chart, but that doesn't mean that a trend line will not get violated, right? You still need to take into consideration what signal it is you're producing, what the chart is showing you, because the market will eventually breach the trend line. And you can see it's starting to come up shallow here, but that's primarily why I use it, so that I have this visual to say, oh, okay, we breached the trend line, we're coming up shallow here, maybe we're going to see a trend reversal. And likewise, the overshoots that I show you, it isn't always just a breach, but sometimes the market will overshoot a trend line, as it did right here, and that will eventually lead to a reversal. right? But notice the reversal. You had time to get on it here. You don't have to worry about, oh, am I going to miss the reversal? Is the market going to run away on me? No, that's not the case at all. You had ample time. Nice little red bar buy right here. But this trend line overshoot is a little bit of a tip off that, hey, maybe, the market is getting ready to reverse. So when I draw these lines on here, that doesn't mean that the market cannot make a serious move lower. It just means that as far as trade setups go, I would rather be selling from up here than selling down here, knowing that we're going into a trend line. Make sense? And same thing here on the NQ, right? We sold, or we had a good sell opportunity up here near the top end of the trading range. And once again, it doesn't have to nail the trend line bang on, right? Because these lines don't truly exist. So if it comes up, produces a signal, now we have to make a decision. Okay, well, I'll let it turn over the ATR. Okay, there's the ATR. I'll use that as a signal bar. I'll cover above the top end of the channel, and there's my trade. All right, you guys, excuse me just for a moment. I'm going to go get a glass of water, and they'll be right back. Did I miss anything? Not likely. Sean has had to leave, but he makes a good point. Last week I was talking about doing a 20-day challenge where the objective was to finish every day with a positive balance. And Sean says that, it can be a lot more difficult than people think. I haven't really done that, but, well, I did it half-heartedly. But you know what? Let's start that. Let's do our 20-day challenge, and we'll see whether we can finish every day with a positive balance. It really focuses your attention on finding quality signals, not overextending yourself. And the truth is, if you can trade for 20 days with a positive balance, and ideally say $50 per day per contract, there is no limit to the amount of money that you can earn. You will win every trading competition. You will, have people beating down your door. And no, I'm not exaggerating, because consistency in the marketplace is a very important attribute to learn. And you have to, the way you become consistent is by recognizing when the market is giving you an opportunity. I think the hardest problem a lot of traders have is knowing that the market isn't going to give you an opportunity all the time. Today was a tremendous day. We had, right out of the open, we had just one opportunity after the next. We had that beautiful signal right there. We had subsequent follow-through signals, all with, good momentum, good follow-through. But there's going to be days like the other day where it's like this, where the market is not so cooperative and not really willing to give stuff up. And you have to learn to recognize the difference, and you have to learn when you have, or judge the quality of the opportunity. And that's why I show you things like, the basic signals in your hawk, why we want to focus on a first micro-macro cross signal or a macro pullback signal, why we don't necessarily get so excited about a yellow bar signal. We don't take yellow bars. Even though this one had good follow-through, there's a lot of yellow bars you're going to see that do not have very good follow-through, or will give you a lot of heat. Now, of course, at the end of the day, it's your money. You can do what you want. But, why would I want to buy that yellow bar? There's no reason for me to buy it. And lo and behold, it turns and heads the other way. So to me, a yellow bar signal is not a quality signal. However, a first micro-macro cross signal is a quality signal, and one that I would be prepared to risk money on. Likewise with the Falcon. We have our choice signals that we look for. We look for our trend change signals. We look for our late filter entry signals. Here was a late filter entry. And even with the late filter entry signals or things like macro pullback signals, they're not all equal quality. The first late filter entry signal tends to be the strongest. The second one or the third one, or I don't think I've ever seen a fourth one, but let's say there's a fourth one, they're not going to be as strong because your filter shows you momentum. So it shows you momentum going out of sync here and then coming back into sync. So essentially this is almost like a bull trap where you're trapping buyers and then all of a sudden it shows you that the sellers take control again. That's what makes the late filter entry signal so powerful, is that temporary shift in momentum. You trap a bunch of buyers at these levels and then all of a sudden the sellers squash them, and then you get that really good follow through off of that. But notice this late filter entry signal and notice this one. This one, well, depending where you placed your stop, you may or may not have been able to ride out that swing. It was still a valid signal, it just had an enormous pullback to it. See, here's another late filter entry signal also combined with a trend change signal, and look at the nice follow through we had from that. Things like double dots. I don't address double dot trades very often because they're lower probability signals, but they can have good follow through. Where is there a double dot? Well, here's a double dot. And the thing with the double dot is you always want to be able to tie it into a previous resistance or support area. So you can say, oh, last time the market got up here, it made this kind of move. I'm producing a double dot, maybe I'll sell it. The nice thing about the double dot signal is that you have a place to cover the trade, right? You know without a doubt, if the market brings you in, reverses above here, you're definitely on the wrong side of the trade. And you can see we took some considerable heat here before the market finally fell off a little bit. But again, it comes to judging the quality of the signal. That's what we're trying to do here in the room. And, honestly, sometimes you've just got to let the tools do what the tools do. You saw that, what was it, this first micro-macro cross signal right here that I said I didn't think had that much potential to it. In fact, I delayed my entry. But it is a first micro-macro cross signal. We're only scalping. You can go in, take your profit, and get out. And the reason, of course, it accelerated so quickly, if you didn't know, was because the market was in this bit of a trading range and we had all these sellers committed right up here. We had more sellers committing here. And then once their stops got hit, we had more sellers committing here. And once those stops got hit, then it was just really quick. They had to fold. They were all weak. They were all weak sellers. They couldn't hang on. Then the market got up here, found some strong selling, and then brought the market back down. And that will happen over and over again, which is, I suppose, why I'm not so keen on selling at this level here. Even though it looks like it's working out, I would be a weak seller selling here. Right? A strong seller is going to sell up here. The strong sellers were selling this level right here. I would be a weak seller selling here. I'd have to cover the trade at least up there in case there's a little bit of a reversal. But it looks like it's, once again, the DTS tool, smarter than me, but I judged this signal to be of a lesser quality than this signal here. I hope that makes sense. I know sometimes I can start stumbling over my thoughts. Jim's really liking the support and resistance suite. He says, and knowing how to sell the support and resistance lines with a tick count. So Jim's watching the ticks and monitoring how the market reacts to the lines, and also whether there's a sell-off in the ticks. Yeah, that sounds like a great idea, Jim. Okay, it does appear as though they're getting a little bit clustered now. And we have managed to hit yesterday's low. I think it was 45.50, wasn't it? So we're plotting 45.45. We may eventually hit 45.40 today, which would be a very strong area of support. But I would not be surprised to see a little bit of a pullback here today. The NQ made a very strong move lower. Soybeans flattening out. Crude oil still very quiet. I think we're going to call it a day today. If you're trading this afternoon, I think it's realistic to expect a little bit of a hop to the upside. I would not become an aggressive buyer. And I would continue to look for selling opportunities. If we get a buy, I think we're going to get it toward the end of the session. I think you're going to see some profit taking, and I think that could send the market a little bit higher. So if you're going to hold out near the close, that might be the time to become a little bit more aggressive on the buy side. All right, you guys, I will catch up with you tomorrow for Friday's trading session. We'll talk to you then. Bye for now.